Hey guys, welcome back to my channel. As you can see by the title, in this video, I'm going to be talking through a question on risk of material misstatement at financial statement level. So it's more on the technical. Um, Before we jump in, let's just speak on what exactly risk of material misstatement is. So basically, it is at the beginning of the auditors need to make an assessment of the risks that the company that they're auditing has. And specifically risks that impact the financial statement. This can be risks that are pervasive, which means that they impact all, like the entire financial statements, and not just a line item in the financial statements. So let's speak on the approach of using a laundry list. I myself used a laundry list, which is basically just a list of common risks that you found when doing risk of material misstatement at financial statement level questions. And you basically now get into an exam and you want to just throw all of those risks into your solution. So using a laundry list definitely has its pros and cons. The pros being that you are familiar with the type of risk and how to answer it. But the disadvantages of using a laundry list is definitely trying to squeeze in your laundry list in a scenario that doesn't trigger those risks at all. So you really need to let your scenario guide you and remember that the risks that you're going to be speaking on are already in the scenario. So your answer is in the scenario. You just need to know what triggers that risk in the scenario. So be very, very careful when using a laundry list, not to just squeeze things into your solution, even though they're not triggered in the scenario. Let's just speak about the different types of risk of material misstatements at financial statement level questions that you get. The first one is give an assessment of the risk of material misstatement, risks at material misstatement of financial statement level. Assessment means we're speaking on what increases the risk, what decreases the risk. The second one is the risk of material misstatement at financial statement level. So they're not necessarily asking for an assessment of it. So when they ask for assessment, we're giving what increases the risk, what decreases the risk at financial statement level. We're also looking at material things, like I mentioned in the first point, pervasive things that affect the whole financial statements. Whereas if they're asking you just for the risks at overall financial statement level, you don't necessarily have to say this increases the risk of material misstatement at financial statement level or this decreases. You just can jump into stating the risk. So this first paper that I'm using is from one of the universities. Let's jump straight into it. I just want to, as I go through the scenario, highlight what jumps out at me. What is the trigger of the risk that I need to be writing? So you're an audit manager at a local audit firm, JMP Auditors, and have been assigned to the audit of Crimson Furniture Holdings, a JSE listed company. That jumps out at me. Crimson is the holding company of a group of retail companies. That jumps out at me, which sells quality furniture and household appliances either directly to customers or indirectly to customers by selling through the online marketplace takealot.com. For the past 3 years, the audit of Crimson and its subsidiaries has been the responsibility of Ms. Elaine Hermanis, CASA registered auditor and audit partner at JMP. So JMP are our auditors. The financial year end of all companies in the group is 30 September 2022. You are reviewing some of the audit files relating to the companies in the Crimson Group for the financial year 2022. Members of the audit team have prepared the following documents. So we have notes on planning meeting, acceptance of the Crimson's new auditor, new subsidiary, Curtec, and then copy of the board meeting minutes. Right, so the first one is a note on planning meeting. We have the attendees, we have the JMP representatives, and then we have the group structure. So we see over here, Skolton Designs has 40%. The rest of the subsidiaries are 100%. So this is now an associate, unless told otherwise. So Craft, Rugs Galore, and Cortec are wholly owned subsidiaries, and the board of directors are made up of the same directors as Crimson's board. JMP will audit all companies in the Crimson's group except Skolton Design, so they won't be auditing this one. Skolton Design's financial statements are audited by J. van der Beek, an audit practitioner in Amsterdam. So we're going to be relying on a component auditor. That increases. Okay, that jumps out at me. Mr. Ambledon became Crimson CFO in June 2022. Okay, June 2022, year end 30 September. So he's very new. That jumps out at me. He was previously the CFO of Sholton Designs. That's this company over here. And was also a non-executive director on Crimson's board of directors. Because of his prior role, he was familiar with how all the companies in the Crimson group operate. Mr. Solomons completed her training contract with JMP in 2020 and was appointed as Crimson's head of corporate reporting in July 2022. So she used to work as the auditors. She finished it in 2020. Now we're in 2022, and she is the head of corporate reporting. That jumps out at me. That jumped out at me because she was with the auditors. Now she's head of corporate reporting. That basically tells me that she's in a position to manipulate the financial statements in a way that the auditors might not be able to spot because she knows the work of the auditors so well. Ms. Hermanus expressed delight upon learning that Ms. Solomons had been promoted to the position of head of corporate reporting and added that Ms. Solomons would contribute significantly to increase the quality of the company's financial reporting. So Ms. Hermanus, remember, is the partner on the audit. So now she's delighted that her previous staff member is promoted because basically she's going to make the auditors' lives easier because she's going to increase the quality of the financial statements. That should jump out at you. Okay, so Mr. Ambledon provided JMP with copies of the draft 2022 annual financial statements of its subsidiaries and associate and noted the following key information relating to the companies. Okay, so we're seeing the revenues. So Cortex revenue is low. We're seeing a loss by Choreographed. This is a very low profit. Okay. And then we're seeing a foreign currency over there. We're seeing euros over there. Those three things should jump out at you. Mr. Ambledon acknowledged that the financial situation of the South African subsidiaries was poor. That should jump out at you due to declining profit margins, should jump out at you, and indicated that he had been specifically appointed to replicate his success at Skolton Designs, which prior to his appointment was also performing poorly. So he moved from this company to report on the group because he turned around Skolton Designs. So now he's being asked to turn around the group's performance as well. That should jump out at you. Let's continue reading. Let me just highlight that. So through adjusting financial, so how exactly is he going to turn it around? So through adjusting the financial statements and without any operational or strategic changes. So he's going to improve the financials of the group of companies through adjusting the financial statements and without any operational and strategic changes. So he's not going to change the operations. He's not going to change the strategy. So he's not going to reduce the costs. He's not going to increase sales. He's not going to increase or change the strategy of the company. He's just going to miraculously adjust the financial statements so that the performance of the company looks better. That should jump out at you. Mr. Ambledon has said that he can quickly improve Crimson's reporting performance. He added that the previous CFO of Crimson was an ultra-conservative and prudent accountant and tended to apply the IFRS standards too strictly when preparing the financial statements. In his opinion, this undermined fair presentation. Okay, so now the CFO of the group of companies is telling you that the previous CFO applied IFRS too strictly. That should definitely jump out at you. And he said that him being prudent in his reporting undermined fair presentation. So being prudent is now being extra careful. If you see an expense, you want to report on that expense rather than saying this is immaterial to report, for example. So the previous CFO reported and made sure to report everything. Now this guy is saying, because he did that, he undermined fair presentation. Where we're thinking that if a company is reporting everything and is making sure that they're being prudent in every step of their financial reporting, that is going to give you fair presentation rather than the fact of not being prudent, right? So that should jump out at you. Acceptance of the new audit client Curtech. Mr. Ambledon requested JMP to consider accepting an appointment as the registered auditor of Curtech Limited, a company that was incorporated on 28 August 2022 and is 100% owned by Crimson. Relevant information gathered by Ms. Hermanus relating to this acceptance decision is in working paper 206. Okay, deadline. Mr. Ambledon requested that the group audit, right? Group audit be finalized by the end of October 2022. So year end is 30 September. The next month is October. So he's basically giving auditors a month to audit the financials, which is ridiculous. There's a really tight deadline, which should jump out at you. To facilitate this, the following actions have already been arranged by the group. Skolton designs 2022 audited financial statements to be used for equity accounting purposes will be made available in the second week of October. So Skolton was the one that's now being audited by another company, a component auditor. So they are going to be available the second week of October, which means that we're only going to have 2 weeks before reporting deadline with the component auditor's work, which is a problem. And then Ms. Solomons completed her training contract with JMP in 2020 and was thus fully familiar with the JMP audit strategy. She agreed to prepare a file by 17 October that she knew JMP's audit software would be able to use, containing relevant information to support the amounts and disclosures in Crimson's 2022 group financial statements. So now Ms. Solomons, who previously was part of the audit group, is going to help with preparing a file that is going to be audited by the previous company she worked for. That should jump out at you because she knows the audit company and their strategy so well that she's going to assist them in preparing the file. This puts her in a position to manipulate, to hide material things because she knows the strategy of the audit company well. That should jump out at you. Then financial year 2022 overall audit strategy. So Ms. Hermanus presented the 2022 overall audit strategy documents to Mr. Ambledon for approval. Key audit matters, audit risks, and the audit strategy to be adopted by the audit team were included in the document and discussed. Ms. Hermanus also proposed a budgeted audit fee of 1.6 million, an increase in 7% on the prior year. Mr. Alberdon spent a lot of time questioning the fee increase. A key suggestion he made in an effort to reduce the audit fee was for Crimson's IT specialists to prepare any reports required by the audit team by relying on the reports received and then focusing solely on the exceptions identified in those reports. The auditors can reduce time spent on detailing, testing, and decrease the audit fee. Ms. Hermanus agreed to consider Mr. Ambledon's suggestion. Subject to this change, Mr. Ambledon approved the overall audit strategy document. Then we have audit objectives to document the consideration and process in accepting. Okay, now we won't go into that because that deals with accepting the client. All right, so those are the things that jump out at me when reading this information. Before we jump into just a quick discussion on those items, I want to highlight how exactly you should be writing out an answer for risk of material misstatement and financial statement level. Like, how should you be writing out your risk? So the first thing you want to touch on is your trigger in the scenario. So you'll say as and then trigger in the scenario. Then you're going to mention why it's a risk, and then you're going to give your implication. For example, JC's listed is a JC listed company. Crimson is a JC listed company. So as Crimson is a JC listed company, There is a risk that they will be non-compliant to the compliance requirements set out by the JSE, which can result in penalties being faced by Crimson. So that's how you're going to now structure how you answer the question. As the trigger from the scenario, why is it a risk? So explain the risk, and then implication, how will it affect the company? So as I mentioned, they can be penalties that are incurred by the company. Right. So first things first, JC listed company. Why exactly does this jump out at me? Like I mentioned, there are a whole lot of requirements and disclosures and compliance requirements that a company needs to do and continuously do to make sure that they're compliant to list on the JSE. So there's a risk that Crimson won't adhere to these requirements, making them non-compliant. Um, that's the first thing. Second thing, there's also a risk that management will overstate their financials, um, overstate their profits to make them more attractive to shareholders on the JSE. Because now, if your company is listed on the JSE, you are competing with other companies that are listed on the JSE in the same industry. So you want your share price to look better than look the best. So there is motive to overstate your performance from management. Then the next point is that Crimson is the holding company of a group of companies. The reason that jumped out at me is because there's so many things to consider when you're in a group of companies. First things first, there are so many transactions that are at play. This company has 3 subsidiaries and associates. So you need to now consolidate all 3 of those subsidiaries' financials, which is complicated, which increases your risk of material misstatement at financial statement level. There's also standards that you need to take into consideration, such as IS-24 related party transactions. Those need to be taken into consideration, and they also increase the risk of material misstatement at financial statement level. So it's complicated. You have things to consider. Also, we have that associate that is not from South Africa. So now we have the foreign exchange differences that we need to take into consideration. So there's risks that come with the translating the financial statements and the figures. And we need to make sure that those translations happen in accordance with IFRS. So that increases the risk of material misstatement at financial statement level. Okay, then moving down, we have the fact that that associate is going to be audited by a company in Amsterdam, Netherlands. So we're going to be relying on the work of a component auditor. So this increases the risk of material misstatement at financial statement level because we don't know whether the work that they've audited can be relied on. We don't know if it's accurate. We don't know if they did the things, which increases the risk of our financial statements because we're going to be using their work in preparing the consolidated financial statements. And then another point is that the CFO joined in June 2022, and now what? We're at 30 September 2022, let's say, or the year end is 30 September 2022. That is, he's very, very new. So now there's a risk that because he's so inexperienced, he'll make mistakes, which increases the risk of material misstatements at financial statement level. Because look at his position, he's the chief financial officer. He's going to be very close to the preparation of those financial statements. So his inexperience really does increase our risk. And then the next point, Ms. Solomon's completed her training contract. This one I spoke on. Basically, she knows the audit in and out. So from the auditor's perspective, we have an increase in risk that she'll conceal evidence, that she'll overstate things, that she'll hide stuff, that she'll steal money and be able to hide it because she knows how the auditors work. She knows the audit strategy. So she knows, okay, the auditors touch on this, but they don't touch on that because X, Y, Z. Okay, then we're seeing a loss by Choreographed. We're seeing a very low profit by Curtech. This is giving us triggers for going concern. Furthermore, when we read over here, it says subsidiaries were performing poorly due to the declining profit margins. Another trigger for going concern. So it's making us uneasy. Is this company using the going concern assumption correctly in the preparation of their financial statements. So just to explain for anybody who doesn't know, your financial statements, when they're prepared in accordance with IFRS, they are prepared with the assumption that the company is a going concern. So basically what you're saying is that the company will be here in the future. So we're preparing it with the thought that the company will be here. So they are not in the position to potentially be liquidated, to close business because of financial issues, right? That's your assumption. That's your basis of preparing financial statements. But now when we're seeing financial issues in the information, we're thinking, we are saying that the company is going to be here, but now these things are jumping out at me that kind of hints that this company is not even kind of, that hints that the company is going through financial issues, that further hints that the company might not be here in the future. Actually, overall, the company might not be here in the future. So I could be using the going concern basis incorrectly. And then what is giving me those triggers? One, Choreographed is making a loss. Curtech, profit is really, really low. Subsidiaries are performing poorly due to the declining profit margins. Those things are my indicators of going concern that I would write down. We'll get into how you would structure that answer for going concern specifically. All right, and then the next point is that the CFO was appointed to turn the company around because of how he turned around Skolton Designs. And then how is he going to turn it around? He's going to adjust the financial statements without any operational and strategic changes. So he's not going to change the operations, like I mentioned earlier. He's not going to change the strategy, but he's going to improve the financials. He's going to improve the performance by adjusting the financials. Now, I'm sure you would agree with me that you can't just go and adjust the financials, right? Something has got to change for you to adjust the financials. And he's not going to make any operational changes and he's not going to make any strategy changes, but he's going to make adjustments, which is a red flag. Okay, further, we read that he has an opinion that the previous CFO was too conservative and prudent and that he applied IFRS too strictly. And that's why the performance of the company was doing bad before he came. Now, those two things, him wanting to adjust the financials and that the previous CFO in his eyes was too conservative and prudent, there is reason to believe that he is not trustworthy, his integrity is under question, because why? Adjusting financials. If it's too strict, in his opinion, it undermines fair presentation, which increases the risk of material misstatement at financial statement level. Then we go further down and we see the deadline. This obviously increases the risk of material misstatement because what? They want us to finalize, the auditors must finalize by October 2022 and the year end is September. So we have a month. The auditors have a month to report or to finish the audit. Now, this increases the risk of material misstatement at financial statement level because the auditors might miss something because of the pressure. Also, management might take advantage of the fact that there's a tight audit deadline and think, okay, they won't find this. Let me hide this under expenses. Let me, because they think, okay, the auditors won't have time. They won't go deeply into testing this account. So that increases our risk of material misstatement at financial statement level. Then this one we touched on about how Ms. Solomons worked at the auditors in 2020. And here they say she's fully familiar with the auditor's audit strategy. Again, she'll be able to conceal evidence. She may be able to perform fraud or commit fraud rather, and not be caught because she knows where the auditors are going to touch, why they're touching there, they're not going to touch there, etc. So yeah, those are the things that jump out at me. Like I said, the triggers are in your scenario. So doing a laundry list, yes, can help with how to answer it, especially when there's time pressure. Because at the start of CTA, when approaching risk of material misstatement questions, And answering them, I was very uncomfortable when it came to how to answer. So maybe doing a laundry list can give you comfort in, okay, I've written out this question, this answer in the structure that is required or that will help me maximize the mark. But be very careful with laundry lists and squeezing the solution into your answer. I just want to look at the way we can answer specifically your going concern. What you want to do with going concern, like I mentioned when going through the answer, the information, that there are going concern indicators that jump out at you. So you want to start by saying, say there's risk that the going concern assumption is used incorrectly, which increases the risk of material misstatements at financial statement level. The indicators of this are, then you list all the indicators in your information that tell you that the company is having financial issues and that hints that the going concern assumption could have been used incorrectly, such as that here you have Choreographed is making a loss, um, Rugs Galore is factually insolvent, which means their assets are less than the liabilities, um, you know, and that the profit margin is low, that they said the subsidiaries are performing poorly. All of those things are going concern indicators. And look at this, you can get a maximum of 3 marks for just this trigger alone. So really, while you're reading through your information, any financial issues that jump out at you about the company, just number them so that when you give your going concern risk, you can add all of those in to maximize your marks. And then those listing type of answers will really help you maximize the marks. So get comfortable with those, really understand those. So come exam day, you are bagging those marks. Anyway, you guys, that is the end of this video and me going through the risk of material misstatement question. I really hope that this video has helped you. Please do not hesitate to let me know if you have any questions. Drop them in the comments below. Let me know what other technical videos you want me to touch. I would be happy to do so. All the best, you guys. You've got this. Good luck.